Edition of Tax Talk Live, Poolside Pointers. For the next few days, I'll be offering up some healthy tax tips, breaking down the tax law changes so you'll be ready when tax season really heats up. So pull up your favorite lounge chair, get your hot sunglasses ready and a cold beverage, and let's get started. There's some things to know and to watch out for this year, primarily among those refund shock. It's real and it could happen to you. Refund shock is simply getting a refund lesser than you expect or lesser than last year, or maybe even owing the IRS. After several good years of pandemic law changes and pro-taxpayer changes, a lot of things are reverting back to the old rules. Lower credits, lower stimulus payments, possible lower deductions, and other stuff that may generally result in a lower tax refund. The big ones to watch out for are simply these. There are no stimulus payments this year. There's no $1,400, no $1,200, no $600, no stimulus if you had a new child. And after 2 or 3 years of that really jump-started a lot of tax refunds. So those won't be on anybody's tax return this year, may cause a lower refund. Secondly, many of the popular tax credits have reverted back to the pre-pandemic amounts. The child tax credit, which was up to $3,600, it's back down to $2,000. The dependent care credit, which has been around $2,100 and it was $8,000 last year, back to $2,100. The earned income credit for single taxpayers, which was about $1,500 last year under the new rules, now back to $500. And even some other changes on age restrictions and income restrictions and tax restrictions means some of those credits that were bigger last year, smaller this year. Also, charitable donations, which were available for the last couple of years, even if you did not itemize. You could take a tax deduction for charitable contributions that you made. Those are gone now. You have to itemize in order to enjoy that. So you won't have that on your tax return. And finally, new this year, there's a new reporting obligation for companies that pay you through a Venmo or PayPal or Apple Pay platform, that they will report amounts over $600 both to you and to the IRS. So even though you may have been doing some business on the side and not clear on what the rules are, next year you're going to get a new document, a 1099-K, which will have all the amounts that you receive, and you'll need to account for those, and the IRS will have them soon. It may not all be taxable. You may have deductions to offset that, and we'll talk more about that in the coming days. But know that the IRS will have a new reporting statement with all of your cash monies received during the year through electronic platforms. What does it all mean? Well, there's certainly a lot to watch for in 2022. It could even mean a smaller refund to you, or it could mean you need to take some actions. But plenty of time to get things done, plenty of times to manage it and to get answers to your question, and we're going to explore all of those over the next few days. So join us here on the Jackson Hewitt Facebook page, get answers to all your questions, get some juicy tax tips, and be better prepared at tax.